Let's kick things off with the broader market. Stocks are raising earlier gains. The Dow and S&P 500 are pretty much at the session lows now, down more than 200 points or 0.6% on the Dow. S&P's down 0.5%, Nasdaq down 0.4%. So, Mike, it's turned from being a sort of tentative bounce day to a slightly nervous pause about this little recent rebound.
And that has been the emerging pattern where, rallies have been a little bit suspect. They've stopped right at these levels that you might expect them to if it was purely a technical bounce. I get why people are a little bit apprehensive. We do have some market-moving stuff coming. Obviously, the CPI number matters in this context of, the energy surge, which seems more of a shortage issue as opposed to a demand issue and seems more of a restraint on growth than it is a reflection of emerging growth. So all that stuff makes sense. We also don't really quite have a quorum today without the bond market, trading. So I think you have to basically say, we're waffling in this range, 3-4% below the highs.
Charlie, it's nice to have you here with us again. I guess I would ask you, do you feel that there's some apprehension in the market, or is it just waiting for a catalyst, waiting to hear the details of some of these earnings reports, starting with banks here this week?
Yeah, I think a little of both. I think I agree with Mike, except for I'd say there is a demand explanation for the strength in energy, and we are seeing different kinds of stocks do okay today. The inflation-sensitive names are doing fine. I think Mosaic was up 3% plus. Energy, oil's obviously over $80. And a lot of that is coming from increased demand for natural gas, increased demand for oil around the world, as natural gas has lots of benefits versus coal and other forms of energy. And frankly, as we've all seen, wind energy has not been holding up its end of the bargain in Europe. So there's a lot of demand for natural gas. So I think it is a mixed message. It's a good message for value stocks and the inflation-sensitive stocks that we like right now.